What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 16th. All right, guys, Tesla stock finishing the day today down $9.57 per share. That's minus 5.59% to the downside. We are fading about another dollar, at least as of right now in the after hours. It's likely to be a little bit different by the time you get to this video. No matter what, though, guys, after hours is bound to be low volume. So take the after hours movement with a grain of salt. We, of course, got news today that Tesla is going to reduce their headcount globally by a little more than 10%. That's according to a memo sent to employees by Elon. So this is the cycle that Tesla tends to go through. A lot of companies, right? This is very normal. I mean, you have companies that will enter big phases of growth and they'll need to hire on. And then as companies need to get ready for the next phase of growth, if they're in perhaps a plateau period or they just need to gear up for their next stage, you'll see layoffs. It's like a tide coming in and out. It's very normal at that level. But let's take a look at this stock and pull out every bias that the market will possibly give us here today. Let's do it in under 10 minutes. Ready? Let's start with a volume profile analysis and just pull out what the market is telling us here on the 5-minute chart to begin. By the way, guys, listen, Tesla is a daily upload. So if you haven't done so already, please subscribe to the channel. Helps out tremendously, and I'll keep the Tesla videos coming every single day. So the moves that I want to look at the volume profile on Tesla here today is that dump off the open. And then I'm not going to circle, but I kind of want to look at everything in the last 2/3 of today. Okay, and of course, we're going to compare this dump to this little bit of recovery. So, really, we're kind of looking at the entirety of the day, but it's going to go quick. So if we take a look here and pull up the volume, what's really interesting, guys, is that during this downside move, we actually didn't get tremendous volume off the open, at least compared to later in the day. If we compare it to last Friday, it was almost an equal volume open. Okay, so it was very contextual off the open. But we didn't get that really quick fade. Instead, we held a little bit of higher volume a little bit deeper into the day than what is normal, which tells me that since that move was primarily to the downside, we're seeing a little bit of bearish bias, but understand it was broken up by equal volume green bars. Okay, so it's not a tremendous bearish bias that I think might be expected on a downside move like this, but there's a slight bias there. However, given the nature of that move, that's perhaps to be expected. Now, as we saw that little recovery, the volume just fades into normal. There's really nothing there that we can pull out. These little dump-offs that we got midday, like here and here, one might expect that to be on a lot more volume. However, it was just slightly elevated. It really wasn't, we weren't seeing 2 million shares per 5-minute bar on 8 consecutive candles. It wasn't like that at all. We were just seeing a little bit of increasing volume, which leads me to believe, a small amount of bearish bias supporting the move when we actually dig deeper and peel back a layer of the onion and look at the volume profile, but not, I think, what a lot of people might expect once you actually dig in and look. And then heading into the close, this is the first, I know that looks scary to a lot of bulls, but understand, guys, this is very normal on blue chips. This is the first bar after the closing bell, actually. That's rebalancing. And you'll notice not a lot of actual movement in the stock. That's because it's a battle bar. A lot of buying, a lot of selling, a lot of rebalancing going on from funds and institutions to just do what they need to do to make the fund or the portfolio, the holdings, look the way they want them to look for the clients for that day. All right. Now let's move on. So by the way, I tend to ignore that candle. It very, very rarely leads to any kind of tremendous movement, and it's battle movement, right? A lot of buying, a lot of selling. It's just rebalancing. So let's move on here. This is the 30-minute chart. Let's take a look. And what we're looking for here are the psychological and self-fulfilling prophecy levels. So if you guys take a look, on Friday, we actually gave up both the 50 and the 200. Those two lines are on top of each other, or were on Friday. The gray and the white. The white is the 50, the gray is the 200. Today, we faded below. Okay, we didn't get a single test of either one intraday. It's pulling the 50 period down. This is really simple today on the 30-minute, guys. Bears, if we were to see a retest, it's likely to be almost 5%. This 50 is likely to come lower as the day goes on. you're talking a multi-percent move just to make a retest of the 50 period. But bears, if that does happen, you guys want to see a hard high volume rejection, and ideally you want this 50 period on the 30-minute getting below this 166.50 to 167 region, which is the tight channel, the lower region, kind of like the support level, or at least what was prior to today, of that bigger channel that we'll look at here in a second on the daily. But bulls, I mean, specifically on the 30-minute, ideally the scenario in the near term is to reclaim both of these, but understand that, you know, again, we currently find ourselves almost 5% away from that 50 period, and we're looking at about 6.5% away from that 200 period back upside, okay, and a big macro level kind of in the way, on the way. So just keeping an eye on that. Now on the 4-hour chart, you can see kind of a similar thing here occurring. We broke downside and moved far away from that 50 period here, whereas that was very much so in play. Bears, you guys want that 50 period in the future now to get ripped downside, right? Keep that potential resistance as low as possible to kind of fill, I don't want to call it a gap, because that might come off as confusing because it's not technically a gap, but that would kind of fill in the difference here, right, between the current stock price and the 50, and get a psychological resistance as low as possible, to kind of push any doubt out of the bulls' minds, and I suppose fellow bears, as possible. Whereas bulls, you know, the 4-hour chart is a slow-moving chart. This 50 period does not move incredibly quickly. Bulls, as long as this thing can stay above 166.50 to 167, if we can reclaim that level with this 50 period still above there, I'd be plenty happy with that, okay? Which brings us to the daily to really get a grasp of this whole story. Now you can see that the real story is going to be this channel here, right? And previously, what we would always talk about is this channel between 166.50 to 167, and then upside to 177.50 to 180, right? It's like two smaller channels that are forming a much larger channel. Well, today we broke that to the downside. We broke that support level that fell out. Granted, it was on news, okay? So that's something to consider, but we're now downside. There is another level right around 160. You can see it's really obvious in the last, like, month or so. We've respected that as support twice. So I'm watching 160. I'm actually going to go ahead and draw a line just kind of around that 160 area. I'm paying attention to that. Bulls, I would love to see that hold as support. Bears, you guys want to take that out as quickly as you can on big volume and head down for a test of that next technical level. We've had these drawn for a long time now at 154.50, around there. 155, 154.50. Okay, but bulls, if we're talking like a best case scenario kind of deal, well, a really great scenario, I'll say, that would be a reclaim of that 166.50 to 167 region as soon as possible. If that can occur in a single day, wonderful. Okay, if we can just make some headway back toward that level, that's great. Okay, but bulls, that's kind of what I'm watching here on the daily on Tesla. Now understand, guys, implied volatility spiked today. It is now at its highest point compared to the last couple of months. Okay, so new options buyers, you're running a slightly elevated risk of IV crush if IV begins to fall from here. Whereas if you own contracts, you're likely seeing a little bit of Vega value being pumped into those contracts. And that goes for, you know, that's whether you own calls or puts. You don't have to be necessarily making money, right, to see the Vega value coming in. But if you own puts and you're like, I'm making more money than I expected I would, this is the culprit. If you own calls and you're like, I'm losing less money than I thought I would, this is the culprit. When you purchased contracts, IV going up is a good thing. But when you buy contracts while IV is high and then it falls, that's not a good thing, okay? Now let's do the expected move here on Tesla. If we take a look, the next expiration we have is April 19th. Of course, earnings. You know, we don't have earnings until April 23rd. Take a look here. April 23rd after the market closes. So if we look here, the next expiration being Friday at the close, that's April 19th, the expected move is plus or minus $7.73 per share. Now, if we divide that by 4 trading days until then, we get $1.93 per share per day. Okay, but I like to add 50% back to that to make up for the fact that that first number assumes a green streak or a red streak. So that gives us an expected move of $2.90 per share tomorrow. Okay, and that's plus or minus $2.90 per share. That's the volatility expectation, okay? But there's one more thing we can do here, and then that's it, right? Out of the directional bias that we got out of the market today. These are the contracts traded on Tesla today. 1.93 million total contracts traded. 977,000 of those were calls. 949,000 of those were puts. So we're actually seeing very evenly weighted with a tiny, tiny call side bias. But the short-term speculators, the 0 to 20 delta range, 441,000 calls, 257,000 puts. So we're seeing an essentially equally weighted overall ratio, but the short-term speculators are call heavy here today. Listen, guys, that link in the pinned comment, that'll allow you to get grandfathered in at the current pricing for the Gold, Gold Plus UOA, and Platinum memberships. You know, the different tier levels, right? Get different benefits, but in that server every single day, I'm sending out my personal scalp setup alerts. I'm sending out in-play stock alerts, unusual options activity, and of course, working with my Platinum one-on-one group. Hope to see you join. Guys, if you have any questions about what we just went over, there are no dumb questions here on this channel. Like, seriously, none at all. Feel free, leave a comment, and let me know what you're curious about. I appreciate you guys, and I'll see you in the next one.